Good day, AVZ Traders. I trust you are well. Welcome to broadcast number 57. This is Dr. George Nyabatsa. We have three more broadcasts before I officially shut down at the end of next week. Now, remember what I said. If you are of course, you are all in the coaching program. You do not lose any time in the 3 weeks that I am off for the holiday break, because that's just added on to your coaching program. So let's have a look at gold. Upper AVZ high of yesterday. Bulls set that up. They tried to push for higher prices. And, by the time we closed in the US session, the bears were trying to kick in. This is a sell zone. Of course, the upper AVZ, it's a sell zone. Bears failed to capitalize on that sell zone. Why do I say failed to capitalize? Well, Asian session, if you're looking at this particular market, there is nothing for you to trade. Here as a setup for the bears, bears breaking out beneath this low of Asian session. This is not even 3/4 of the body size, so it's not big enough for you to jump in and sell it. And we had nothing else by the bears. Every time the bears tried to sell, bulls came in. What was taking place was that bears were trying to decelerate the asset value, but bulls, of course, 3 consecutive bull bars, bulls were absolutely standing up against it. Bears tried to sell off, but look at the scale of these bear candles. Then look at the bulls. Again, we have consecutive bull candles. But the key is that the bulls have to get out above the high of yesterday for them to accelerate the price up. As long as we're beneath the high of yesterday, this is a sell zone. Bulls' first breakout above the high of yesterday did not become a big bull breakout. So there's nothing for us to do here. You can't put an order there and hopefully get triggered in. Doji, another bull doji, but you're already above the high of yesterday. So if you wanted to be technical, you could say, okay, that's a second breakout, because this little buy here closed beneath the high of yesterday. But in any case, you can see nothing yet for the bulls. I've highlighted this in yellow because this happened to be the first candle of London session. So at the London Open, big bull breakout. Now, look at this. Valuation, revaluation. We have this key level that is a big concern. Bulls try, bulls fail. Finally, the bulls get a breakout above it, but we're not trading above this first candle. It's not the first breakout that becomes a large breakout, but the market is going up, as you can see, and the bulls are pretty strong. We just want to see if we get an opportunity for us to get into strategy number 2, which we got by this candle. That doji is strategy number 2. So if you want to get in the market, you are buying above that. You can remove half the risk here, measured move, the actual measured move of that, is there, about there, beneath that, okay? But the nearest technical level is here. So what you want to do, so you don't get stopped out, is just drag your stop down. Make sure you remove half the risk beneath the high of yesterday. That is a key level. Look to the left, your stop can be anywhere in here. So you're taking that trade and you're saying to yourself, well, what are the targets that I'm aiming for? So if you just look at that is a 1-to-1 target if you use a tight stop, but I wouldn't use a tight stop. So that's a 1-to-1 level. Another key level is the market could be looking at the breakout above the high of yesterday. High of yesterday, low of Asian session. There is an early profit target, so you're well within that, but use a conservative stop. That's what I'll do. And you can set your take profit beneath that if you want to take your take profits early. Like if you want to bank the money early, you can put your take profit beneath that. There is another key level above. High of yesterday, low of yesterday. If I do that, you can see it. Measured move, breakout range of yesterday. That's the ultimate goal for the bulls. Will they get there? Well, who knows? if you are in the market, you can watch, or you can come back and look at it over the weekend and see if the bulls are able to keep pushing maybe through to the US session. But that's the goal that the bulls want to go for. So in any case, if you took that, bank your money, you've gone away, you come back with bank money, perfectly fine. If you bank that, and then this sets up, now that becomes another strategy. Number two, a second one, that sets up, you can take that, buy in above that. I hope. Oh, okay. But you know what I'm talking about. Buy above that, measured move stop is beneath here. So you can put your stop beneath here or even just beneath that candle. That is perfectly fine. And you're taking the second trade, right? You bank that, you take the second trade, you still get your target. If you haven't banked that and you're holding your stop, once you're in the trade, let's say you're holding your stop here at break even, that's perfectly fine. It is logical to pull your stop up to beneath here. If you pulled your stop to beneath that candle, you would have been stopped out. But if you see that, then you need to get in again and take some more profits. But if you held the stop, which is also what you can do, at break even, and you see that taking place, you are already at break even. You have another setup. You can take the second setup and bang, you are at profit targets. By that stage, you can hold your stop beneath that breakout trend candle until you hit target. Beneath that until you hit target. Once you hit target, you can pull your stop here and just wait and see what happens. Okay. It is also okay for you to say, okay, first trade, I'm in the first trade, break even. Second trade, I'm break even. I'm going to see if the bulls are going to be strong enough to get there. I'm not going to, if I get stopped out here, fine, but I don't want to do that. If you want to see if the bulls are going to get there and you're going to come back in a couple of hours, big bull breakout trade, can't hold your stop here. Might come back, test and keep going. But if you want to bank your profits, bank your profits. All right, guys. Enjoy this broadcast, number 57. Send questions. If not, we will catch up again and keep the cues coming. Take care and bye-bye.